live? Okay. So, hello everyone, and welcome to this earnings call for Palantir in all ASMR. Before we get started with the actual fourth quarter and full year 2021 earnings, I have a little note regarding forward-looking statements that I like to make, that investor relations think I should make. Excuse me. It's right here. It's right here. Okay. No, that's too far. Okay, so special note regarding forward-looking statements. It says, this annual report on Form 10-K contains forward-looking statements within the meaning of the federal securities law, which statements involve substantial risk and uncertainties. Forward-looking statements generally relate to future events or our future financial or operating performance. In some cases, you can identify forward-looking statements because they contain words such as may, will, should, expect, plan, anticipate, could, can, would, intend, target, goal, outlook, project, contemplate, believe, estimate, predict, potential, future, or continue, or the negative of these words or other similar terms and expressions that concern our expectations, strategy, plans, or intentions. Forward-looking statements contained in this annual report on Form 10-K include, but are not limited to, statements about, and then a lot of stuff here, but you can read that on your own time. Okay, so I think, let's see, maybe, yes, so like I said, welcome. I think we should start with a brief discussion of our business, because no one understands our business for some reason, and I don't know why, but I'll just briefly explain about our business and business model, and then we can move on to the financials, which you're all here for. Okay, so this is it. We build software that empowers organizations to effectively integrate their data, decisions, and operations of scale. We were founded in 2003, started building software for the intelligence community in the United States to assist in counterterrorism investigations and operations. We later began working with commercial enterprises who often faced fundamentally similar challenges in working with data. We have built 3 principal software platforms: Palantir Gotham, known as Gotham, Palantir Foundry, which we'll refer to as Foundry, and Palantir Apollo, which will be named Apollo simply. Gotham and Foundry enable institutions to transform massive amounts of information into an integrated data asset. That reflects their operations. For over a decade, Gotham has surfaced insights for global defense agencies, intelligence community, disaster relief organizations, and beyond. And Foundry is becoming a central operating system not only for individual institutions, but also for entire industries. Apollo is a cloud-agnostic, single control layer that coordinates ongoing delivery of new features, security updates and platform configurations, helping to ensure continuous operation of critical systems and allowing our customers to run their software in virtually any environment. Now, recent crises and systemic shocks such as the pandemic have made clear to many of our customers that accommodating the extended timelines ordinarily required to realize results from implementing new software is not a viable option. As a result, customers are increasingly adopting our software, which can be ready in days, over internal software development efforts, which may take months or even years. You may see further discussion in the section titled Management Discussion and Analysis of Financial Condition and Results of Operation. Maybe we'll get into that later if you are interested. So, yes, maybe we should, maybe that's enough for the intro. Yeah, let's get on with the financials. And of course, I would like to start by presenting the highlights. Yes. Let's start with the highlights for Q4 of 2021. Now, total revenue grew 34% year over year to $433 million. Commercial revenue grew 47% year over year. U.S. commercial revenue grew 132% year over year. Government revenue grew 26% year over year. We added 34 net new customers in Q4 2021. We had a loss from operations of $59 million, representing a margin of minus 14%, up 3,500 basis points year over year and 900 basis points sequentially. Adjusted income from operations of $124 million, representing a margin of 29%. Cash from operations of $93 million, representing a 22% margin. We had adjusted free cash flow of $104 million, representing a 24% margin. Closed 64 deals of $1 million or more, of which 27 deals are $5 million or more, and 19 deals are $10 million or more. We had a GAAP net loss per share diluted of $0.08 and adjusted net earnings per share diluted of $0.02. Okay, so that's it for the fourth quarter. For the full year 2021, our total revenue again grew 41% year over year to $1.54 billion. U.S. revenue grew 53% year over year to $879 million. Commercial revenue grew 34% year over year to $645 million. U.S. commercial revenue grew 102% year over year. Government revenue grew 47% to $897 million. Commercial customer count tripled to 147 customers year over year. U.S. commercial customer count increased 4.7 times to 80 customers year over year. Total net dollar retention of 131%. U.S. commercial net dollar retention of 150%. Government net dollar retention of 146%. We had cash from operations of $334 million, representing a 22% margin, and adjusted free cash flow of $424 million, representing a 28% margin. Now, for the outlook for Q1 of 2022, we expect 443 million in revenue, adjusted operating margin of 23%. For full year 2022, we expect adjusted operating margin of 27%. Per long-term guidance policy as provided by our Chief Executive Officer, we continue to expect annual revenue growth of 30% or greater through 2025. Yes. And that was the outlook for the future. So let's go into a bit more detail. I know you're all dying to have me read the full condensed consolidated statement of operations. And I could list both for every row, I could list both the 3 months ended December 31st for 21 and 20, or the year ended of 21 or 20. But for the purposes of this earnings call, we'll go with full year numbers for 2021. So we'll start from the top and we'll work our way down. Okay, so starting with revenue, we had revenue of 1.541 billion, 889,000. Yes, 800,000. 1.5 billion. We had a cost of revenue of 339 million. We had a gross profit 1.202 billion. Now, the operating expenses. We had sales of marketing 614 million. We have research and development for 387 million. We have general and administrative for $611 million. Now, total operating expenses, that is $1.6 billion. We also had a loss from operations of 411 million. We have interest income of 1.6 million. We have interest expense of minus 3.6 million. We have other income expense net minus 75 million. Now, loss before provision benefit for income taxes amounts to minus $488 million. Proficient benefit for income taxes, that is $31 million. Now, that gives a net loss of $520 million. Now, net loss per share attributable to common stockholders, basic is minus $0.27. Net loss per share attributable to common stockholders, diluted, is also $0.27. Now, weighted average shares of common stock outstanding used in computing net loss per share attributable to common stockholders, basic, is 1.9 billion. And the weighted average shares of common stock outstanding used in computing net loss per share attributable to common stockholders, diluted, is as well 1.9 billion dollars. Now, let's see, we'll move on to the condensed consolidated balance sheets. And again, we'll deliver the figures for the full year 2021. Now, if you're interested in comparing these figures from 2020, you may go to our page and download the full Form 10K, which is available as of now. Now, first, assets. Current assets, cash and cash equivalents, is $2.2 billion. We have restricted cash of 36 million. We have accounts receivable 190 million. marketable securities, $234 million. We have prepaid expenses and other current assets of $110 million. Now, that leaves total current assets for $2.863 billion. We have property and equipment net $31 million. Restricted cash, non-current, $39 million. We have operating lease of right of use assets of $216 million. And other assets of $96.386 million, which gives us a total assets of $3.247 billion. Now for liabilities and stockholder equities. We have accounts payable of $74.9 million. We have accrued liabilities of $155 million. We have deferred revenue, $227. We have customer deposits of $161 million and operating lease liabilities of $39 million, which is total current liabilities of $660 million. Now, deferred revenue, non-current, $40 million. Customer deposits, non-current, $33 million. And we have here operating lease liabilities, non-current, $220 million. And other non-current liabilities of $2.2 million. So really just a drop in the bucket there. Which leaves total liabilities of $956 million. Yes. Now for stockholders' equity, we have common stock of $2 million. Additional paid-in capital of $7.7 billion. Accumulated other comprehensive loss of -$2 million. Accumulated deficit of minus $5.4 billion, and a total stockholder equity of $2.2 billion, and total liabilities and stockholder equity is $3.2 billion. Okay, let us then, let's now move on to the condensed consolidated statement of cash flows. Yes. And again, we'll do the figures of 2021. Now, the first point is operating activities, and to start, we have a net loss of $520 million. Now, adjustments to reconcile net loss, net cash provided by used in operating activities, depreciation and amortization, $14 million. Stock-based compensation, $778 million. Deferred income taxes, $43 million. Non-cash operating lease expense, $33 million. Unrealized and realized loss gain from marketable securities net of $73 million. And other operating activities of $2.7 million. Now, changes in operating assets and liabilities. We have accounts receivable of minus $35.2 million. We have prepaid expenses and other current assets of $10.9 million. We have other assets, $3.3 million. We have accounts payable of $57.7 million. Accrued liabilities of $15 million. We have deferred revenue, current and non-current, of $24.7 million. And customer deposits, current and non-current, of $104.9 million. Now, for operating lease liabilities, current and non-current, we have minus $32 million. and other non-current liabilities of $3.1 million. Now, net cash provided by operating activities is $333 million. Now, for our investing activities, we have purchases of property and equipment, $12.6 million. Purchases of marketable securities, $308 million. Purchases of equity method investments, that's around zero. Purchases of alternative investments, that is $50 million. Purchases of privately held securities, that's $33 million. And other investing activities of $3 million. Yes. So net cash used in investing activities, that is $397 million. Proceeds from the issuance of common stock net of issuance costs, that's zero. Proceeds from issuance of debt net of issuance costs, that's zero. Principal payments on borrowings, that's $200 million. Proceeds from the exercise of common stock options is $507 million. Repurchase of common stock, zero. And other financing activities of $708,000. Yes. Net cash provided by financing activities, $306 million. Effective foreign exchange on cash, cash equivalents, and restricted cash, that is $238 million. And we have cash, cash equivalents, and restricted cash beginning of a period, $2.1 billion. And cash, cash equivalents, and restricted cash, end of period, $2.3 billion. Now, should you be interested in a reconciliation of GAAP to non-GAAP financial measures, this is unaudited, so no, we'll probably skip that. Yeah, we'll skip that. You won't be interested in that. And that's again the adjusted earnings per share, diluted. We covered that pretty much, I think. Look at this. Look at this. See if we covered this. Net loss attributable, weighted average shares. We have that. Okay. So, with all that out of the way, I think it is also important to name a few of the risks. We have of course talked about our business. I have more information about our different platforms here. Our customers, we work with many of the world's leading government and commercial institutions, and as of December 31st, 2001, we have 237 customers, and our software is currently used around more than 50 industries in the world. Sales and marketing, customer acquisition strategy targets large-scale, hard-to-execute opportunities in large government and commercial institutions. The high installation costs, high failure risk, complexity of data environments, and long sales cycle. These are raise the barriers to entry for competition, so that's good. Yeah, the larger, more complex, more technologically demanding the problem, the more likely we are to succeed. Additionally, we've begun expanding our access to the platforms to early and growth stage companies, including startups, as we continue our outreach efforts to increasingly broad swath of our potential market. So you'll like that. Now, across both the public and private sectors, there is history of failures when exactly investing in new technologies. And digital twin failures, software buyers. Now, expansion of access to platform, direct sales force, we have that, and we're investing in as well. Sector and industry platforms, we're developing industry operating systems to help companies and government agencies manage operations across their entire organizations. So that's good. The U.S. government, channel sales, cloud partnerships, joint ventures, new business partnerships, account growth, research and development. Let's do that and let's then move on to the next part, I think. Now, research and development, because that's really key. We believe that in order to fully address the most complex and valuable challenges that our customers face, we must experience and understand their problems firsthand, and to do so we embed with our users. Our research and development function is responsible for the design, development, testing, validation, and refinement of our platforms, and embedding with our users allows us to identify research and development opportunities for our platforms or new products. We focus on innovating and developing new features and modules for our existing platforms or new products, further enhancing the functionality, reliability, usability, and performance of our platforms, and by leveraging the tens of thousands of frontline hours across various industries and using modern technologies, we can better anticipate customer needs and bring new use cases and new applications of existing services to our existing and potential customers. We have made and will continue to make significant investment in research and development to broaden our platform capabilities, strengthen our existing platforms, and innovate, of course. Now we have a section on privacy and civil liberties principles. Systems must incorporate privacy from the beginning of the design process. Decisions that can affect individual rights and liberties cannot be left solely to computers, and technology is not the answer to every problem. To impact our team, privacy enhancing technologies, access control, sensitive data interference, federation, audit logging and analysis, data integrity and redress, and data retention and deletion, competition, intellectual property, seasonality, employees, human capital, diversity, equity, and inclusion. Yes, okay. Now, Now, item 1A, risk factors. This is important. Investing in our Class A common stock involves a high degree of risk. You should carefully consider the risks and uncertainties described below, together with all the other information in this annual report, Form 10K. Now, our business, financial condition, and results of operation or prospect can also be harmed by risks and uncertainty not currently known to us, or that we currently do not believe are material. If any of the risks actually occur, our business, financial condition, results of operations, and prospect could be adversely affected. In that event, the trading price of our Class A common stock could decline, and you could lose part or all of your investments. So, now, the full list of risk factors is actually more than 50 pages, so a third of the annual report. Basically, I'll just give a brief summary of 2 pages here. I hope you'll all allow me that. Now, our business is subject to numerous risks and uncertainties that you should consider before investing on our Class A common stock. These risks are described more fully and include, but not limited to, risks relating to the following. Okay. I'll just whisper really quietly because they're risks. Risks, yes. Okay. We have incurred losses each year, and we may not become profitable in the future. We may not be able to sustain our growth rate. Our sales efforts involve considerable time and expense, and our sales cycle is often long and unpredictable. A limited number of customers account for a substantial portion of our revenue. results of operations and our key business measures are likely to fluctuate significantly on a quarterly basis. Seasonality may cause fluctuations in our results of operations and positions. Our platforms are complex and may have a lengthy implementation process. We may not successfully develop and deploy new technologies to address the needs of our customers. Our platforms must operate with third-party products and services. We may be unable to hire, retain, train, motivate qualified personnel and senior management and deploy our personnel and resources to meet customer demand. We may be unable to successfully build, expand, and deploy our marketing and sales organizations, and we may not be able to maintain or enhance our brand and reputation. Unfavorable news or social media coverage may harm our reputation and business. Exclusive arrangements or unique terms with customers or partners may result in significant risks or liabilities to us. We face intense competition in the market. We may be unable to maintain or properly manage our culture as we grow. We may not enter into relationships with potential customers if we consider their activities to be inconsistent with our organizational mission or values. Joint ventures, channel or sales relationships, platform partnerships, and strategic alliances may be unsuccessful. We may not be successful in executing our strategy to increase our sales to larger customers. Breach of the systems of any third parties upon which we rely, our customers' cloud or on-premises environment, or our internal systems, or unauthorized access to data. The pandemic may continue to significantly affect our business and operations. The market for our platforms and services may develop more slowly than we expect. We have made and may continue to make strategic investments to support key business initiatives, including in privately held and publicly traded companies, as well as alternative investments, and we may not realize a return on these investments. Issues raised by the use of artificial intelligence on our platforms may result in reputational harm or liability. We depend on computing infrastructure of third parties, and they may experience errors, disruptions, performance problems, or failure. We may fail to adequately obtain, maintain, protect, and enforce our intellectual property and other proprietary rights. We may be subject to intellectual property rights claims. There may be real or perceived errors, failures, defects, or bugs in our platforms. We rely on the availability of third-party technology that may be difficult to replace or that may cause errors. Our business is subject to complex and evolving U.S. and non-U.S. laws and regulations regarding privacy, data protection and security, technology protection, and other matters. Our non-U.S. sales and operations subject us to additional risks and regulations. We may encounter unfavorable outcomes in legal, regulatory, and administrative inquiries and proceedings. We may fail to receive and maintain government contracts, or there may be changes in the contracting or fiscal policies of the public sector. Many of our customer contracts may be terminated by the customer at any time for convenience and may contain other provisions permitting the customer to discontinue may be a decline in the U.S. and other government budgets, changes in spending or budgetary priorities, or delays in contract awards, and the multi-class structure of our common stock, the founder voting trust agreement, and the founder voting agreement concentrate voting power with certain stockholders, in particular our founders and their affiliates. Now, that concludes the summary of the risk factors, and for the full description of each of these factors, I refer you again to our Form 10K annual report. And I would, at this point, open the floor to questions from any analysts listening in, but it seems to me that you are all actually asleep by now, so we will skip that.